Good evening, all. Ira Epstein with your Ira Epstein Financial Market Wrap-Up, and this wrap-up is for Wednesday, the 3rd of November, 2021. Well, today, first off, let me make it clear, I'm still not back in Chicago. You're looking at a computer screen that I'm using on a veranda right here without my green screen. I'm still in Mexico. I won't return until next week. But I want to get these updates done unless I take a side trip, which I did yesterday, and just can't get back at a reasonable time. So when I'm looking at the markets, what do we have? We had the Fed today come out. They did as expected. They have begun the tapering process. They'll do $10 billion a month reduction out of Treasuries, $5 billion a month out of Treasuries. That'll stabilize things for a while. But remember, tapering is not cutting off. They're still adding money every month, just a lesser amount of it. The Fed has made it clear they have no intent of raising interest rates until they see the employment situation is better. We get employment numbers Friday morning. That's going to be very important for what the market is looking for. I'm hearing whisper numbers of you might get 500,000 job additions. We'll see if that's going to be the case or not. So let's go right to the work and understand that tomorrow you've got, in the energies, you've got an OPEC meeting. I don't think they're going to raise production by more than they've already said, so I'm looking for no surprises there. I think OPEC's goal is to keep oil in this $80 area. It makes money for them, and they can take the money from us without killing the golden goose. Bank of England tomorrow will have a meeting to discuss or possibly say they're about to raise interest rates. If you look at the S&P, how could you fight this? Here we are up another 56 points, up 1.22% on the week, new all-time high. If you look at the daily charts, yeah, we're getting a little bit of a problem. I'll move that back here for you. You made a higher high and you're starting to pull back a little. Let me tell you what happens when the Fed makes a move. The Fed comes out at 1 o'clock with a statement and at 1:30 Central Time with a press conference. What time do you think it is in Asia? Everybody's asleep. In Europe, the markets are 6 to 7 hour difference from America. Therefore, the traders have gone home. We get the yin-yang. We do one thing. Asia decides do they think we did the right thing or not. Europe looks at both of us to decide nah or yes. And then by the time it comes back to us in the morning, you have a fresh market. That is when I think the opportunities show themselves for the first time. As we take a look here at the swing lines, you have a pattern of higher lows, higher highs, bullish. We have a market that has gotten away from this number, the 439, the old high. I'll just erase that. We don't need it anymore on the chart. Higher lows, higher highs, supports back at 45.31. But to get there, if the market wanted to go visit it, you have to break the pattern of higher highs, higher lows. Where's the resistance in the market? The upper Bollinger Band. Haven't hit that number, by the way, since back into this time frame here, the October 21st, 22nd period. It can get there. What about momentum? Embedded reading. Did we make a higher high than yesterday? I'm talking, even though this is Wednesday, the Thursday high is higher than Wednesday. If you've taken my enhanced Bollinger Band course, that negates the idea that I would tell, or I think the pros will be buying the pullback if we get one tomorrow. I think they'll stand back, but I think they stayed long through this, and I think until the embedded reading is taken out, they remain in the bull camp. In the NASDAQ, it's the same. Higher highs, higher lows, fully embedded reading. And again, you made the higher high already than you did on Wednesday. No, I don't think the pros are going to reach down and buy the market tomorrow. I have to say the same thing in the Dow. Oh, that's one of my rules. I've learned over time that you play these rules, they're high percentage. Does anything work all the time? I think you know better than that. But do things work more than they don't? Yeah. Do things have a very high probability? A lot of them do. So when I look at it, these are one of the high probability areas. And they tell me, hey, when you make a higher high first, the pros probably aren't going to buy the market. In the Russell, you're outside of the upper Bollinger Band. You never reach to buy it. But what the Russell has done is it said, remember, I've said this all the way through, you're not going to have this party without me joining in, and suddenly it's become one of the strongest looking of the current charts. In the VIX, it's a higher high, lower low pattern, oversold. Even if you fall, I don't think you're going to get new shorts coming in. But any move to 1367, if that were to be hit, I think the professional traders would write puts something close to the $16 area to try to get the market back there and take the cash out of the market. In the 30-year bond, what you've really done is gone from the lower Bollinger Band all the way right here. You can see me holding that for you. That was on October 21st. Up here, you hit the upper band, and since then, you've just been meandering back and forth. I see nothing new to do. If the market's going to get bearish, it has to get back under the 18-day average of closes and get a pattern of lower highs, lower lows. It's overbought, in need of a correction. What about the 10-year note? Nowhere near as strong as the bonds. Never got near the upper Bollinger Band. The trend is up, but it keeps faltering right here at that 18-day average of closes. I don't see a thing to do in the market. Do I think the pros are buying it? Well, no. I think the professional monies, a lot of them don't play these Fed reports. I think you step back, like I've said, you let the yin-yang impact hit them, and then you take a hard look at the market. In the dollar index, should this market get back under again 93, and I want to take this 93.81, I had that in the wrong area. That could give you a clear path of lower highs, lower lows, and set the market up, believe it or not, for a break here. Where's your battleground? Right at the 18-day average of closes. If you don't take out 93.81 and you get up and you take out 94.21.5, look for the 94.37 level. Euro, can you get more neutral than this? Just trading over and over at that 18-day average of closes? I don't think so. The trend has a downside bias. It loses it on any settlement price over 116.23 on Thursday. British pound, why go into the Bank of England meeting? It makes no sense. The market's got a clear resistance path. I haven't been keeping up too much between the 48 hours. The France and the England were had given, or rather the English had given France to release those boats. I'll try to get some news on that tomorrow. But while on vacation, I try to do that. I don't read as much as you would think on vacation. In Bitcoin, just sideways action, hampered by the upper and lower Bollinger Band. Still a market that has got what? Well, if we take a look, this high was 63,575, and over here, let me get this if I could, this number was 64,665. It's actually a higher high there and higher lows. These are wrong. You should have these arrows pointing up. You're in an uptrend. The market's probably being bought. It's 62,129. Stops under 60,945. Hoping to get up here. Momentum just sort of drifting, not doing much. Brent versus WTI crude. Look at that differential. They have just brought in the difference between them from $4 to under $1. And if you take a look now, and by the way, that's December. It's no good. My mistake. I apologize. Again, I'm on vacation. I had changed it. It didn't save. I'll do it right after this. Didn't look right to me. January Brent, you're under the lower Bollinger Band. Do you ever go short under a lower Bollinger Band? The answer is never. There is no circumstance. So I would, if I were you, just be watching the market, let the OPEC meeting happen and decide from there. The pattern we have here in January is lower highs, lower lows. Apparently I didn't catch these right. And in the heating oil, you're in a bearish trend. Let me just show you how I'd be doing that. You're also looking at some of the ways I show my paid subscribers what to do. We take charts like this, but with a lot more studies on them. And in the nat gas, you're just caught between the lower band, very close to the upper band, back and forth here. No trend whatsoever, just meandering back and forth. I'm Ira Epstein. Please put up with my bit of nonsense and what we're doing here. Again, I'm in Mexico trying to get this out for you, and a lot of people would just take their vacation. I don't want to do that. You take care.